And we're going to mute this music out. And Miss Walker, it is on you.
All right. Well, thank you, DJ Dion. I'm so excited, guys. On this this afternoon, this early evening, I should say, I want to welcome you guys to the second half of our virtual trading summit. As you know, the first full component, everything that we did in the previous segment, was really getting you acclimated. It was really about making sure that you knew how to get your trading app set up, making sure that you knew how to maneuver through some of the back office, getting through IML Academy, and even having your first tastes of IML TV. And so before we get into segment 2, okay, which is the actual trading that Dion was just talking about, what I want to make sure is that we go over and we handle any business that we need to handle as it relates to our entire first week component, all right? So what I want to do is I'd like to just open it up for Q&A. If you have questions about anything that we talked about or anything that we did over the past week, now would be your chance to clear that up, because we are now getting into the nitty-gritty of what we all came here to do, okay, which is trade. And we will continue to speak the trading language, right? We're not going to baby you any longer, okay? You're going to have to, this crazy point. You're going to have to learn how to speak the language. You're going to hear it. And tonight, we're going to start integrating you more into how all of that actually works, okay? So any questions, any comments, anything about what has happened over the past week, guys, go ahead, unmute, make it known now. Let's get you squared away so we can get plugged into this trading component. And don't be shy, guys. This is your trading summit.
Hey, Tracy, this is Dana. I got a question. Did you say go ahead? Oh, okay. When we're doing like getting the trades from like Swipe Trade, and it'll have take profit 1, take profit 2. How do you, I don't know if we've gone through that or not, but how do you set up for it to do, once it takes the first profit, to take the second one without closing it out?
Okay, that's a really good question. Okay, so I'm going to address this in 2 different ways. Okay, I'm going to answer the question more direct, then I'm going to answer the question that you didn't ask. Okay. So the first thing is, if you want to go all the way to take profit 2, what you do is you set your take profit as the take profit 2 price point.
Oh, okay.
Okay, because if you don't, then it will take you out the trade when it hits the first take profit. Okay, so you set it at the second take profit point, and then what you need to do is what most of us do if we're doing that is we set what we call a reminder, right, or a notification. Now, there is an app that many of us use, all right? It's called Call Levels. In fact, let me kind of show it to you here. Hold on. It's called Call Levels, all right? So if you can see that little C, it has a 1 next to it. You see that call, the C with the circle C? That's what it looks like, okay? So Call Levels. I'm on an iPhone. I believe it's on Android as well. But you can go to the store and get Call Levels, okay? Call Levels. And what you can do is you can go into Call Levels. You can select the currency pair that you want. Let's say you're doing Euro USD, right? And you can go to Euro USD, and then you tell it what price point you want the alert to come to sound off an alarm. That you can set it at your take profit 1. Right? So you would set your actual trade to take profit 2, but you would set your call level to take profit 1. And then what happens is you go into when the alarm goes off, then you can go into your call levels. You can go into your MetaTrader 4. You can see where the trade is. And at that point, you need to reassess. And you can decide to stay in the trade or to take your profit. Now, if you decide to take if you decide to stay in the trade, then what you'll want to do is you'll want to move your stop loss, right? Because your stop loss would have been so that you didn't lose, right, before. But now you want to move it in front so that you're in profit. So now you just don't lose the profit. So it's really called your stop profit at that point, right? So now if you move your stop loss from where you were at the beginning of the trade to now where this take profit 1 level is ideally, right? Or a couple pips before that, then what happens is that now, even if the price goes the other way again, it will take you out the trade if it goes back past that take profit 1, and at least you've secured your money from where you started through the take profit 1. Okay, but that's how you essentially do it. Okay, now does that answer your question?
Yes, it does.
Okay, so that's the question you asked. I'm going to answer a question that you did not ask either. Okay, that scenario is this. What we want everybody to get really good at doing is not worrying so much about what the take profit 1 and 2 is. What we want you to focus on is your goal. So in your trading plan, if your goal is I want to get 10 pips a day, or I want to focus on getting 20 pips a day, then we want you to set your take profit at that. So the take profit 1 could be 200 pips away from where you're starting at. And instead of setting it at 200 pips, we want you to focus on your daily goal. So you would set yours only at 20 pips, right? And not worrying so much about what the trade is doing, because the trade could do a lot of different movement, right? And all this stuff and going on. And we want you to be able to at least consistently be able to meet your daily goal, right? And so if it's 10 pips or 20 pips, many times swipe trades are at least 25, 30, 40 pips, right? So set yours at the 20 pip or the 10 pip or whatever your pip goal is and go from there. That make sense, Dana?
A whole lot.
Okay.
It takes away a big fog of confusion for me, so thanks.
You got it. Awesome. Awesome. Anybody else?
So for example, if I said I wanted to set my profit at 50 pips and I'm just getting started and I'm trading at 10 cents. So would I say, okay, well, if 10 cents and I want 50 pips, I would say 10 cents times 50, and that's $5. So I'm setting my goal at $5. So if I see my trade either get to that 50 pips or that $5, then it's time for me to get out. I've set my goal. I don't need to go back into the market because I've reached my goal for the day. That's a clear example.
That is a very clear example, because you're calculating pips, and maybe that might be a little challenge initially, right? So you pull your calculator out, you calculate your pips, you stick it in there. But if you're just looking at your trade itself with the numbers, if you know that you're looking at making $5 and it's at $5.20, close out. Close out. You're done. Even though it went to $6. Oh no, it went to $7, right? That is what's going to happen to you. And you're going to take your eye off the trade. You're going to go wash the dishes. You're going to come back. Now it's going to say -$3.
Right.
And you're going to wish you would have just closed out when it said $5.25.
Right. Thank you.
Very clear example. Thanks, Dee. Anything else, guys?
Chase, Colette has a couple questions in the chat.
Okay, so how do you modify a trade? Okay, so Colette, when you're in your trade, do you have an iPhone or Android?
I have an Android.
Okay, so I'm not 100% sure if it works the same because I have an iPhone, okay? But essentially what I'm able to do, and you can test it out, okay? Do you have any open trades right now?
No, I close it out.
Okay. So you can't modify a trade that you close. You know that, right?
Yeah.
Okay. So for example, like, okay, so I'm in an open trade right here, right? And it's up $9. You see that?
Mm-hmm.
Green is going, okay. So if I press and hold that area, what happens is that menu comes up.
Oh, I see.
And then it says modify.
Oh, I didn't see that on my phone.
I can modify. Also, if you swipe right, so my little area where it's positive, if I swipe right, I'm gonna close this trade out. If I swipe right, you can see those little options there.
Mm-hmm.
You see the pencil?
Yeah.
The pencil means modify.
Oh, okay, got you. All right, thank you.
Okay.
All
and
right.
if you hold on, let me I'm glad we looked at that because I'm getting ready to close that out. Close that out. There we go. Okay. So that's how you modify the trade. Now, when you're modifying a trade, you cannot modify your lot size. Okay? When you place a trade, whatever lot size you pick, that's the lot size is going to be. The only things that you can modify would be your take profit and your stop loss, because obviously if you're in the trade, it's already triggered the initial price that you got in the trade. So you can't change that either if you're in the active trade. So the only thing you can change in an active trade is your take profit and your stop loss, okay?
Okay.
If you are not in a trade yet and you have set an order, like let's say you want to do a buy stop or a sell stop or a buy limit or a sell limit order, you're waiting for price to get to a certain point, then you can modify that as well. Again, you cannot change your lot size, but you can change the entry price as well as the take profit and the stop loss. Now, if for any reason you actually want to change your lot size, if you're in a order, if you're in a buy limit, stop, buy limit, sell limit, buy stop, or sell stop, if you're placing an order, the only way to change your lot size is to delete the whole order. Okay? So you just delete, and it's not affecting anything because the trade hasn't triggered yet. Okay? So you just delete the order, and then you can start the order over and put the lot size that you actually want to use. Does that make sense?
Yes, thank you.
You got it. All right, guys. Anybody else? All right. All right, so it looks like we are ready to rock and roll. All right, so guys, tonight we actually have our contest that is starting, okay? Tonight the contest starts, all right? Let me explain to everyone what the contest is. Is everybody listening and paying attention? If for any reason you miss what I say, you have to go back and listen to the recording, okay? So this is what the contest is going to do. We are looking to reward our top 3 traders at the end of this week, okay? Our top 3 traders. Now, top means that let's say everybody started with about $3,000 or so. We're not looking at how much money you may have made with the trading. This is all in your demo account. Everybody understand? You are trading in the contest in your demo account. We are not suggesting that you are trading in your live account, right? So this is being recorded so that we are crystal clear. Demo. Okay, so now we've gotten that out the way. The contest is you're going to be trading in your demo account. And the goal is at the end of the week by Friday. So starting today, all the way through the end of the week, Friday, because the market opened on Sunday. It opens on Sundays at 5 p.m. Eastern Standard Time, and it closes on Fridays at 5 p.m. Eastern Standard Time, okay? So you've got all week until Friday, the market closes. And throughout each of these days, you're going to be trading. You can take swipe trades if you want to. You can use IML TV. You can use whatever you want to use in terms of getting the trades. But we're going to go over a strategy with you today, okay, that we think is simple and something that you can implement. But you're not being restricted to that. But we want to share with you something at a basic level, what you can start to look for, okay? So you're going to be trading all this week on your own time. You can place as many trades as you want, so on and so forth. The winners will be determined based on the percentage increase in your account, right? So if your account starts at $3,000 and you increase your account by, 100%, right? Then that would mean essentially that you would be at about $6,000 or so, right? Because you went up 100%, okay? So we're going to be looking at percentages of growth. Okay. Now, I also know that sometimes people, set their demo accounts, even though we said 3,000, some of you guys said it for 5, some of you guys said it for 10, some of you guys said it for 1 million, whatever. So that's why we're not looking at dollar amount, because we can't control the dollar amount. What we can look at on a consistent basis is percentage increase. Okay. So remember what your goal is. Remember on the quiz, like your goal is to take high probability trades, right? High probability trades. So that's going to be that. Now, we have 3 prizes or 3 places, like a bronze, a silver, and a gold, right? So let's just say third place, you are going to get from the Dream Team a beautiful trading journal, okay? We're going to give you a trading journal, okay? It's going to be awesome. That's third place. Second place, we're going to give you the trading journal, but we're also going to give you $50, okay, cash money, $50 that you can fund with your trading account. Now, what you do with the $50, like we're going to PayPal it to you, okay? So now, if you decide you want to do something else, that's on you. But our intent is to help you either fund or add more funds to your live account, okay? So second place is the trading journal and $50. First place, ladies and gentlemen, is the trading journal. We're going to also give you $100, and first place is going to get a private 60-minute session with our very special 7-figure master trader. Okay, we're going to give you exclusive time with the master trader, right? You can ask, they can point out stuff to you, you can get things squared away, whatever, okay? So again, third place, the trading journal. Second place, $50 and the trading journal. First place, $100, the trading journal, and a 60-minute one-on-one exclusive coaching with a very special 7-figure master trader. Now, is everybody excited about those prizes? If you're excited about those prizes, let's put a 1, let's see your hands, let's do a shake or something, right? Judy's clapping, there's gotta be something, right? Okay. Awesome. So we thought that would be amazing. We hope that you guys feel that it's awesome too, because we want to incentivize you, but we want to incentivize you from the standpoint of what we're doing, right? And an effort to help you. So we feel like the trading journal helps everybody. We feel that the money can help the people that win that. And we absolutely feel that the trading session with the master trader can help that person as well. So it's anybody's game, right? It's anybody's game. What's going to happen is by 6 o'clock, okay, by 6 o'clock on Friday, you're going to need to take a screenshot of your account. We'll probably talk about this a little bit more about how to exactly do this, okay, when it gets closer. But the idea is that you're going to take a screenshot of your phone for the past week, okay, because you can sort it by the week, and we'll look at that, and we'll look at beginning balance, ending balance, and we'll calculate percentage increase, and then we'll choose the winners. Okay, we'll show you how to do that, where to send it, all that good stuff. But that's how we're going to do it. All right, we will need you to share with us what your trading account looks like from your MetaTrader 4 on your phone. That's the only way we can do it. Okay, so that is what we're doing all of this for. Not all of it, but a good incentive to do it is that. But we hope that you continue with your training even after the summit is completed in its curriculum. All right, so everybody clear on the contest? Everybody excited about the contest? Everybody know what the contest rules are? Okay. All right. So now, guys, what we want to do is I want to introduce you to one of the traders on our team. He is someone that trades, right? If you guys ever wanted to, if you ever listen to something that Michael Jordan said, he says that, ideally, he would look at people who said that he was the best, right? And he said it's because he's missed more shots than anybody else too, right? He's missed way more shots. And what is the point of that phrase? The point of the phrase is that he's taken so many more shots than everybody else that he's had to miss more shots that he could learn from and correct, right? Learn from and correct. And this trader on our team is definitely a person that is taking shots every single day, all day, taking shots, learning, growing, perfecting, enhancing, changing, switching, growing, right? Mastering the process. And so what he's going to do tonight is he's going to go over just getting you out of like the academy, getting you out of IML TV, getting you onto your charts now. Okay, getting you onto your own charts, showing you how to do some basic maneuvering and things like that from your charts. Oh, Dion, great. So guys, grab pen and paper, okay? Or however you take notes, you want to make sure that you take the notes and go through, because I promise you, not everything you're going to get right away. The great thing is that this is being recorded, okay? So you can watch it, later. You can watch it later if you need to watch it later, so no need to worry. But please make sure that you have something to jot down the notes in the immediate such that you are good to go, all right? So we're going to do some charting, and he's going to go over a strategy that we think is awesome. Everybody had a chance to watch the IML TV sessions this week, right? So when I say SnapBack strategy, everybody knows what I'm talking about, right? Everybody knows what I'm talking about, right? I'm not speaking a foreign language anymore because you guys got on it over the weekend, right? SnapBack, SnapBack, SnapBack. So I am excited to introduce to some of you and reintroduce to others one of our traders on our team, one of the leaders on the building side as well. But Mr. Jamie Marine, are you there?
I am here. Can you hear me?
We hear you loud and clear, sir. Now
I'm trying to come in on the screen. Am I coming in?
Okay, so I was gonna say I didn't see you. Hold on. No.
No,
you're not in yet.
It's starting, but we're on the way. We're on the way. If not, I go on the phone. Okay. There we go.
There you are.
All right.
Hold on one sec. Okay. So Jay, are you ready to give everybody the goods tonight?
Am I ready? Come on. Are y'all ready? That's the question. Matter of fact, let me tell y'all a little something real quick. This be the first time y'all really see me kind of engaging with you all because you're new. And I really like engagement, because that's how we know that you're understanding what we're actually going over. I don't want to go over anything and go over your head. I'm going to do as much slowing down as I can to make sure that we get in some good charting and understand what we're doing tonight. So please make sure if we ask questions that you're not afraid to jump out there and speak your mind. It's okay. We all had to start somewhere. I got my head busted plenty of times. So yeah, it's okay to want to not get your head busted. So
for those of you that might not know what head busted means, could you share with our members that may not know what that means? Okay. What does that mean?
Right. Matter of fact, let me go ahead and get y'all familiar with a couple of terms that I use myself. Head busted kind of means get a whooping, get slapped, but by the marketplace. And this is in reference to your account. So for instance, if I might feel like I want to risk $20, in other words, put $20 in my trading account, and I get in there and instead of playing with my 10-cent lot size, 0.01, I would get in there with like 0.08 with $20, and that's like 5 pips and you're out quick. So like, head busted, that means your account is blown in this in this terminology over here. But that's one term. Bag. Bag means money, aka blue, aka positive pips, aka do not let that money go. Get the money, get the bag, and run. Don't be greedy. Meaning, if you see, this is my new strategy because I've had my head busted so many times. And I openly say that because I want y'all to understand that you don't have to make the same mistakes that we've made, because we went through this. This is the reason why we're here to educate you, so you don't have to get your head busted as many times. Because at the end of the day, we can't stop you and tell you exactly what to do. We can only give you some examples of some trades that we know, some strategies and stuff like that. So please take heed and you know, engage like I asked, if you don't mind. Do I need to click in the chat to pop it up so I can see them, Trace? Question.
Oh, you need to click. Yeah, you need to click the chat.
Okay. You know, I'm using on the phone. Okay, there we go. There we go. All right. So those of you who have been active inside of the training, the homework, if you will, or should we say self-work? Because at the end of the day, this is all about self-mastery. It's mental, it's emotional. So you definitely want to make sure you go through all of the education that you can get, that you can gain, so you can understand how to control those emotions. Something that I've literally had to continue to learn as I go. You know, and what that means is, for instance, you might be in a trade, and you have a stop loss. Stop loss meaning you have a certain area. You should know what a stop loss is, but a certain area that you want the price to stop you out if it goes negative. Or once you get positive, you want to stop you out before it gets below the price point that you wanted to hit. So what you got to do is you got to understand that if it comes down and hit that stop loss, you originally had in your mindset, this is the minimum or the maximum, should I say, that I'm willing to lose at this point. So if it hits your stop loss, go ahead and back away. You know, it's okay. You know, it's okay to miss the shot. You know, it's okay to not hit the field goal this time. You know, you don't have to necessarily go right back at it. Try again. Give yourself a break. The market is open 24/5 for exiting way. So you have all day to catch a good trade. Give yourself a break. Come back in at another good point of an entry, or just look at a different trade. I'm just telling because I've been there, I've done it. So mindset wise, if you do get stopped out, be cool with the stop out, unless it's like something that you accidentally did. Like you meant to set a certain stop loss and you accidentally set it because you didn't mean to do it or something like that, and it stopped you out before it even started. Something like that, then of course you get back in. But in reference to, like, you've been in a trade for 20 minutes, an hour, something like that. It's been riding up, riding down, it's getting down, and you're like, okay, let me move my stop loss down again. Okay, let me move it down again. Okay. I'm telling you right now, just be okay with getting stopped out and then looking at another trade, because it can only get worse, because that just means that you didn't properly analyze the charts. So your whole plan changed up, which means you're just kind of guessing at this point, because what you're doing is you're looking at a chart and you're trying to analyze where you think the price is going to go. So if you're literally saying from here to here, like if you mark up on your chart from here to here, and you expect it to come here, but you mark it up from this distance, but yet it's starting to get here, and you're like, okay, I wanted to not close me out, so I move my stop loss down, and it comes here, and then I keep moving down. My original goal was here from here. Now I got to rechart everything that's done happened in between here and where the original price was at, or the original price that I wanted to get to. So you have to understand that once you move your stop loss and that take profit, you're changing your whole strategy. So does that make sense? You can type 1 in the comments if that made any sense. Because mindset is everything, fam. It is everything. And if you don't understand how to take a loss, you will understand. Trust me, you will understand. The market will help you understand. We want to help you understand before that happens. But if you have to learn the hard way like I did and like I continue to have to do sometimes, it's okay as long as you continue to learn. Like Adeze says, you're always a student or always be a student. So that's that. I do want to ask for those who have been studying this week, though, the original question, what have you been like looking at as far as pairs, as far as the different, and y'all can throw out some of the chart, you know, GBP, JPY as in Great Britain pound, Japanese yen, US dollar, Japanese yen, some of the different pairs that y'all been kind of playing around with, and we can open up the harmonic scanner if it has some open trades and we can see about matching some of those up. Okay, we got GBP, JPY. That's one. I already got that one on the list. So if anybody else want to throw out one or two, we'll look at a couple so we can just basically USD, JPY. All right, that's another one I had up. AUD, USD. All right, that's three. That's three. We'll go with those three for now. USD, AUD, USD, AU. All right, let me share my screen. Bear with me. Sometimes when I share my screen, it likes to act slow when I first get kicked over. So please bear with me. Can we see the screen?
Yep. Sure can.
Okay, there we go. Might be a little slow at first. Bear with me. That's a lot of markups. I don't want y'all to get too confused by that. We're going to go over to the harmonic scanner. Let me see. I guess I don't need to see the chat at the moment. All right, let me see if the harmonic scanner has our first pair, GJ. Sometimes you'll hear us refer to a pair. We'll abbreviate it. We'll give the short version of it, which is, in this instance, GJ, Great Britain pound, Japanese yen, that's GJ. AU, that's AUD, US dollar. So it's kind of simple, but some of the pairs can definitely confuse you. So definitely want to get hip to the short slang, because when some of these trades get thrown out, it's real quick, and it becomes a very common language, as we do it more often. Just like Tracy was saying, you can prepare a shot, shoot it all day, every day. The more and more you do it, the more accurate it's going to get, and it's just that simple. The key to being successful is not winning one or two times. It's about continuing to, pursue being better than you were the last time. And every time you hit a goal, it's not about settling. You always want to be working on being a better version of yourself, period, point blank. So, it doesn't hurt to practice. All right, we got GJ right here. I'm assuming that everyone knows how to use this harmonic scanner or knows at least how to get to it. We did go over that in, our day ones and twos of the summit. And if you wasn't here to catch those intros that we were doing, definitely go to the Facebook group. Make sure you go to the recordings, and we definitely walk you through it to make sure you understand it. And then we actually quiz you to make sure you overstand it. So definitely make sure you go back to the recordings. All right, so here we are. We're going to look at the naked chart first. I'm going to go ahead and put up the Bollinger Bands, which is a indicator that we use. This is definitely necessary for this actual method. It's not necessary to have it inside of your strategy at all times, but if you plan on using this strategy, you definitely want to use the Bollinger Bands. And again, to get familiar with this strategy, you can definitely go into IML TV and look at Luke, as he is basically Trump of this situation over here, as far as inside IML. You want to set your length to 34. And then the deviation to 30, the deviation to 2. Make this bigger so you all can see it. Let me open up my talk box, make sure I can see the corresponding if y'all are seeing everything. Is everything okay? Y'all can see the screen?
Somebody's drawing on the screen.
Right, but you can't see it.
Yep.
Okay. Yeah. That's all we need to know. All right. So with the snapback strategy, let me get this a little bit more spread out for you all. First of all, let me explain this gap right here. Right here is basically a gap from where the market opened up from Friday. It closes at 5 p.m. Eastern time and then opens back up on Sunday, 5 p.m. Eastern time. Depending on the brokerage account that you're using, the actual trades can close out before 5 p.m. hits. I've had to learn that the hard way several times. I like to try to get out the market before the weekend hits, but sometimes, 4:30, 4:33, whatever time the market actually closes on us, sometimes it, just catches you off guard. And again, it just depends on the different brokerage account that you're using. Some of them actually close at 5, some of them close at 4:30, and some of them might close at 4, but you would definitely want to do your research on that. But that's the explanation within this gap right here between where the market closed right here on Friday and then where it opened up here at the top today. I heard somebody come in on the mic. We have any questions? If not, I believe that's you, Daniel, with your mic on. You don't mind muting, we'd appreciate it, unless you have a question. Outside of that, does everyone understand the explanation as far as this gap right here? Because if you look back, let me stroll back. If you look back, you'll see that it's a continuation, it's a flow. It's not a gap in between the market. When you're looking back over everything right here over the last week, you're not going to come across a gap like we did right there. So the reasoning behind that is because the market closed, and sometimes when the market opens up, not all the times, but sometimes when the market opens up, we have right here what we call a gap trade. That's another conversation, but in short, it's a gap and it's a trade. So we'll leave it at that for right now. And basically, like I said, the market just opens up. Sometimes it stays in a continual flow like it is, and sometimes it's a gap in between it. And basically, it's an opportunity for you to catch the gap because it basically has to correct itself. Not all the times. The market does what it wants to, but the majority of the time, if you see a gap, the market is going to correct itself, meaning it's going to come back down from wherever it's at and get back in this pattern that it was in. So it's an opportunity to catch the bag from here on down to wherever the market will continue to flow. Again, you want to understand that your goal might be 20 pips a day. You set your stop loss right here where to be 20 pips. And if it happens to come back up, you get out. If you're just watching it, then you can just always follow it and just jump out at any point. But at least if it comes back down, you at least got your goal, which is the 20 pips for the day. So that's in short on the gap trade. So let me go ahead and get to the actual trade we're working on, which is the SnapBack. So here we have the top of the Bollinger Band. This red line going through the center is the middle of the Bollinger Band, represents the 50 mark, halfway basically. And then we have the bottom of the Bollinger Band. Let me go ahead and pull up the RSI for us. Trace, I need a confirmation real quick if you could. With the RSI for a snapback, is it 13 or 14? I don't want to get a wrong information because, you know, I actually trade on the shorter time frame.
I believe snapback is 13.
Snapback is 13, okay. So basically, to understand, and I didn't actually go over that earlier either, when you hit your RSI, when you need to change up some of your settings, you can, and this is in the harmonic scanner, you come down here where you see RSI, and it's a little settings bar. If you scroll over to tell you format, click it, and then it'll give you the option to change any settings that you need to for that particular indicator. And this one that we're talking about is RSI. I want to change it to 13. With the style, you can color the background if you want to. Just go down here and, you know, kind of tap it, give you a little bit of color just to help you see the main zone that you're really expecting the price to be in. And that's on the RSI. And once it comes outside of it, it gives you it helps you kind of visually see it a little bit better by having that zone filled in. And you can decide that by looking at it here in a second. 68 will be the level that you want to set for your top line in your RSI. And for the bottom line, you want to set it at 32. And what we're doing here, I'm going to demonstrate here in a second. What we're doing with that, let me move this out the way over here. That'll work. All right, what we're doing with that is giving you an example right here. On the RSI, the price goes above right here. This line right here at the top is the line that we just set on the RSI, which would be the 68. So what that means for us is we want the line on the RSI to basically come up inside of this zone, anywhere between 60, 68, and 70. And once it comes inside of this zone, that indicates for us that this is an area where the buyers are starting to kind of die down, and we're looking at a good sell opportunity to jump in the trade to ride it down from here. And the same thing vice versa. If we go back on the chart a little bit, hold on one second. There we go. We go back on the chart a little bit, we'll see right in this area where the price came below this dotted line right here, came outside of the colored area. And this right here, this line represents the 32. And what that indicates is anytime the price comes below this line and anywhere in between here, that is a area of the buyers getting ready to come in and the sellers are weakening out. So you're looking at a buy opportunity once the price comes below the 32 level. So again, once it comes below, you're looking at a buy opportunity. Once it goes above, you're looking at a sell opportunity. Let me go back over here. Check on y'all, make sure that's understood. Everybody understand that? We good with that? All right, all right. I didn't ask to put ones and stuff like that because I didn't. Oh, here it is. Let me see. Let's see. And then I think I just made my screen bigger too. Man, I know I can put it. There it is. There we go. All right. My bad, y'all. This is my first time actually trying to do all of it together, so bear with me, please. All right. Get that back brought up. Where the screen at? Okay. We back? Can y'all see the screen? Thumbs up. I can see some thumbs. There we go. Boom. Thanks, Sheila. I can't see anybody else, so appreciate that. All right, so that's one checkpoint that we're looking for. We're looking for it to either come down below the 32 and get into our buy zone, or we're looking for the market, the price, to come above the 68, which will be our sell zone. All right. So once we come back over here, we want to look at our Bollinger Bands, and we want to look for areas.
Hey, Jay.
You got something, Tracy?
Yeah. Whatever happened just now, it's super, super blurry. Whatever you did.
Oh, okay. Okay, let me see. I know what I did. I got you. More unoptimized.
Yes. There we go. Better.
Okay. Appreciate it. See, y'all, I told you, look, it's okay to learn something new. It's okay. Always be a student. It's okay. All right. So again, over here on the actual chart, now that was your RSI checkoff that you need to do. So if you need to write that down, you're looking for it to get in your buy zone. I mean, your sell zone. When it goes above the 68, you're looking for it to at least get above your 68 for this strategy to be one of your confirmations, to get in the actual sell, and then to get in the actual buy, you're looking for it to come below the 32. It doesn't necessarily have to get all the way below it, but you're looking for it to come below it. And then I'm gonna show you some other things with the actual Bollinger Band with the actual chart and movement in the price up here that's gonna give you the actual confirmation that you need to go with that last confirmation. So pay a little bit more attention right here as I try to zoom in with my slow motion computer. I'm actually someone who actually uses the cell phone more than anything, and I like to use TradingView, which is another platform to mark up your charts, and they actually have an app, so I can do this while I'm on the go. So forgive me if I'm a little bit rusty over here, y'all. But we will get the job done, please believe it, and we will be jumping into trade here in a second, or have the opportunity for you to analyze it and choose to get in it on your own, because we did start the competition tonight. So bag and run. That's the message from me. Get the bag, run. Here we go. I think I still got some motion. We got some motion. Is it sliding? There we go. What you can always do to back test this strategy is just go back in the chart. And we're on a 15-minute window. We're on a 15-minute window, so you can always go back and check on the 15-minute window. You want to stay in your trading plan to mark this up is the 15-minute window. You can also do this in a 5-minute chart as well. But for this particular strategy, we're on the 15-minute, for those who didn't know, who might have had that question. Here we go. And sometimes it doesn't, it's not like it happens all throughout the chart. It's not always a full confirmation in order for it to do what it does. I'm more of a risk taker, and if it gets close enough to it, I'm willing to get in it and attempt to catch the bag. But because I am willing to get in and attempt to catch the bag without it doing all the confirmations, I have lost the bag I already had trying to catch another bag. So keep that in mind as well. That's called risk and being willing to take risks. So you have to be willing to get your head busted. So here we are. Right here is the perfect example for us to look at. So like I said, we have the top of the Bollinger Band, which is this top blue line. The shaded area is basically the area in between all the action inside of the Bollinger Bands. So you have the top of the Bollinger Band, the 50, and then you have the bottom. What's my mouse? Uh-oh. Everything froze up. Let me come back on the cell phone. We good now? Okay, I see Judy moving around, so we're good. I think we're back in there. Top of the Bollinger Band, middle of the Bollinger Band, bottom of the bottom of the Bollinger Band. And what you're looking for one of your confirmations is for the price. Let me zoom in for you all a little bit. There we go. See it a little better there. You're looking for the price to come down outside of this bottom Bollinger Band. In this case, for a buy, looking for a buy opportunity, you want to look for the price to come down outside of this Bollinger Band. Can you all see that? Right here, the price came outside of the Bollinger Band. Right here, the price is inside of the Bollinger Bands, completely inside of it. Even the wicket came down right here and then went back up. Hopefully y'all understand what a wick is. If not, then you need to be on top of your homework. And it's not a problem for you to go back and do your research if you haven't got there yet, because we understand some people are starting at the beginning of the week. So definitely feel free to go back and research what a wick is, but it's basically the bottom of this candle. It shows you where the price went, attempted to go, and then it pulled back in. And then this is where the actual price went, where you actually see the fatter part of the candle. So that's just a quick overview of a wick. But it stayed inside of the Bollinger Band area right here. Right here, the price ended up dropping down right in this area. It was the first time that it came down. And keep in mind, each one of these candles represent 15 minutes. So it's not like you're looking at a candle and it's like, oh, okay, they just move real quick. They move real quick. It's not like it's an instant action that happens. You have to be patient. The name of this game is definitely patience. So this one candle right here, it took it 15 minutes to get below the bottom of this Bollinger Band. Then this next candle, once it came down here, the wick, let me zoom in a little bit more. There we go. There we go. Okay, so initially this candle formed and it came down here, and then it got weak. That candle got weak, the price got weak, and it came back up, and the wick is the only thing that stayed below the Bollinger Band. Then the next candle formed, it tried to come up, it stayed here, tried to come down, but then it came back up and it stayed above the Bollinger Band. That's 15 minutes on one candle. The next candle, 15 minutes. That's 30 minutes total for the price to move just a little bit. Then you come over here, and then we have this nice sized candle that formed, and it finally pushed us below the Bollinger Band. So if you're watching, literally, if you're watching this action right here happening as it's live, and if you're looking at this trade like, okay, it's going down, it's going down, it can keep going down. Like if you're waiting on it to wick out and then possibly jump back up, as you can see, it can keep going down, get to the Bollinger Band, and then push the Bollinger Band even farther down. So the key is having some patience and then waiting for these confirmations to happen. So that's why you want to take note and make sure you understand that you're waiting for the candle to actually come below the Bollinger Band, and then this is when you're really looking at the actual time frame to actually be checking out the charts. This is when you want to be paying attention to it if you plan on doing market execution, which is pretty much what this the strategy is all about. So you got this first one that formed below the Bollinger Band, then you have the next one that's starting to form. Literally, it started below the Bollinger Band. Literally, it started below it, not above it, then came below. It started where the last one stopped at, was still below the Bollinger Band. Wick out a little bit, but it still stayed below. We got another candle came down a little bit, wicked out, stayed below the Bollinger Band, came out, wicked up, came back down, stayed below the Bollinger Band. And then we get down here finally where the price decides, okay, let's go up, take a little breath, and then we're gonna come back down. This right here is what you call a little bit of pullback. So now you see we came back inside of the Bollinger Band. Does everybody understand how we are looking at the price action right here from where we came below the Bollinger Band and then we came right back inside of the Bollinger Band? Everybody understand that? Cool, that's pretty basic. So once it gets back above the Bollinger Band, now you're waiting patiently for the price to go up, do whatever it's gonna do, then come back. Somebody drawing on the chart. Come on, man. What's up? Y'all playing with me out here? Y'all trying to get, I'm just playing. Whatever you do on your screen, I believe it shows up over here as well. So appreciate that. So what you're waiting to happen is for the price. Do I need to circle stuff for y'all? Because I can't do that if it's necessary for me to start you know, circling stuff instead of just using the mouse. Okay, we good? I see a couple of people saying we good, so cool. All right. So we came above right here. We was below, now we came back above. We're waiting for the price to come right back down and come below the Bollinger Band again. This is all in one area that we're focused on as far as for one confirmation. Once this happens, it comes below, goes above, then comes back down. If you look at it closely, you'll see that it forms a W. Let me go ahead and close this. Yeah, I need to draw this stuff. So when I draw my lines right here, pay attention to what we're doing with the line. Let me make it a little bit bigger so you can see it. I think everybody can see that. So we go down. Bear with me for a second. All right, here we go. We go down. We came below the Bollinger Band. I'm about to go to Trading View. I'm used to doing this on Trading View. We go up. Came back inside of the Bollinger Band. Then we came back down outside of the Bollinger Band. Then, bow, we go up. Now, does everyone see the W that formed right here? Let me open up the chart, the chat. Y'all see the W right there? Okay, I see some thumbs. Let me scroll down. Let me open this chat instead of the visual. There we go. Yes. Cool. That's what we need to see right there. Minimize that. All right. That's what you're looking for, ladies and gentlemen, as far as when it comes to looking for a buy opportunity. And then I'm going to show you what you're looking for to confirm for the confirmation. Like I said, we've got 3 confirmations that we're looking at right now. This is for the action with the chart with the Bollinger Band. So you're looking for the action for the price to come below the Bollinger Band for a buy opportunity. You're looking for it to come below the Bollinger Band, come back inside, make a good pump back inside. It could go inside just with 1 or 2 pumps and then come back down. That's not what you're necessarily waiting for. You're literally waiting for it to come down, look like it's going back up to a full 50%. And if I pulled up the actual Fibonacci, which is another indicator we'll talk about in the future, you can draw that line up. bring it down here, and that'll show you anywhere in this area is about 50% of a retracement for the price coming down to right here, and then 50%, you can see it from where it's at. Right here is halfway from where it was at. So that's 50% retracement. Halfway, if I come right here and draw a line right here across where the price came, that's 50% retracement. And when you see the 50% retracement, that's how you kind of know that's a good area for pullback, which is also what we call a good area to re-enter the market if you were selling. So right here, we got the pullback, and we're waiting for the price to come back down on the other side of the W to come below the Bollinger Bands. The reason why I'm repeating this is because I'm telling you, you're going to look at the market. It's easy to see it. It's easier to see it when the market is, when we're looking backwards. When you're actually live in the market, I'll show you another example up here where to come up, come down. I mean, right here, if you look at it, it came down below, came up, came down, but it didn't come below. So if you would have got in right here, thinking that it's a buy, you would have came in, it came up here, came back down, played around, came. You see, it's consolidating right here. So it's not what you're looking for as far as a confirmation to get in. You're looking for it to come down, come up. It can act like it want to come down. It can act like it want to come down. But once it actually comes down, you're going to know it. And you're going to know it based on the next confirmation I'm going to show you with the RSI. I hope we understand that we're waiting for it to come below, then back in, below, then back in. I'm going to emphasize that a couple more times throughout the night. Now, the RSI, if you pay attention to what we have going on up here, if I draw a horizontal line, not a horizontal, I'm sorry, vertical line, right here, where the price peaked out, where it bottomed out, and if I draw my horizontal line here, let me make it a little bit bigger. Boom. You see this blue line that's coming down right here. This is showing us where we need to line up the vertical line with the RSI at the bottom. And when you do this, exactly. Yes, sir. The waves are in there too. That's a whole nother conversation. I got to keep it simple for myself though. Here we go. So we have the line. Once you see you line it all the way up, you look at the RSI. You remember the first checkpoint or the first checkoff I told you, we're waiting for a buy opportunity. We're waiting for the price to come below the 32. Once it comes below the 32 and come back up, boom, that's one point that we're looking at. You see the point? Put a 1 in the chat if you see the point. I got my chat up now so I can get them confirmations. I've been waiting on the engagement out here, ladies and gentlemen. There we go. You see the one, you see the point. Okay, cool. All right. So you look right here on the RSI, then it goes back up. Now, true enough, risk takers would see this as an opportunity to get a quick buy-in, get you a few pips. We're not recommending doing that. We're recommending you actually catching a better bag versus a little short piece of change. Now, it's always cool to take it if you understand how to trade that kind of way, which is what we call a scalping. But if you don't understand that, you need to stick to what actually is going to be a confirmation for you to literally have all blue. And if you don't know what all blue means, that means you're winning. Pretty much. Red means, as far as the actual colors in the inside of your trading account, you'll see that red means head bust. Or not necessarily head bust, but it's you losing versus winning. So you want to see all blue. So you want to wait until you get these confirmations so that you do see blues. So it came back up as we expected it to do, because this wasn't but one pump down. We came back up on the actual chart with the price, and then we down. You look at it over on the RSI, it's doing the same thing. It's go up, consolidate a little bit, it goes up, consolidate a little bit, then it continues to go up. Once it goes up, now it says, all right, let's make our way down. As you can see up here on the chart, when you draw the lines with it, it looks pretty smooth. But when you actually are in the market, and if you don't have the right lot size, I can just tell you right here, if you came in right here expecting the price to keep going up for a buy because you see it's going up now and you got in too early for the buy, you're like, all right, it's gonna go up, and you're like, it's going up, it keep going up. I missed a good entry on it. Let me jump in now late. You come in right here as a buy, thinking that the markets are gonna go up, and then you don't really understand what a lot size is, and then you put a 0.10, for instance, and you have a $30 account. That 10 means $1 that you're risking, and you think that the market is the price is gonna go up, and the price actually says, nah, let me go back down. So it comes down here. You don't have a stop loss in because you don't necessarily understand stop loss. So right here to right here, you are already down like $6, $7. Now it's coming down some more. That's 7, 8, 9, 10. You down like 15, 20 pips right here, which if you're using a dollar lot size, that's $20. You're already negative right here. And you had a $30 account. So now it's going to automatically take you out the trade, because you're almost about to blow your account and you didn't set a proper stop loss, and you didn't get in the trade at the right time because you didn't wait on the confirmation. So you're down $20. You're waiting on it. Oh, I see some blue. It's going to come back up. I'm going to be able to close out in a positive instead of negative. So you like, all right, I'm gonna stay in it. You stay in. It comes back up. Now it's not now it's not negative $20. Now it comes back up to negative 14, negative 12. Okay, I'm cool with that. I can take that. Let me try to jump out now. And you waited too late. Now keep dropping. You back down to 20. Uh-oh, I think I froze up. Okay, you back down to 20. Now you down to 30. Your account done blown now, so you're out the trade once it gets down here. And then guess what? It's still going down. So if you still was in this trade, 30, 40, 50, 60, 70, 80, 100, $150 gone, just like that. And these are 15-minute windows, so that's, you went to sleep, didn't set your stop, $100 gone, or your account blown, and then you wake up and see why your account is gone, because you got in too early. But if you would have waited on the confirmation, which I'm going to show you the next part of the confirmation, the price can, you were smart because you did your studying. You've been going back testing some stuff. You saying, okay, I want to make sure that I come in and win this contest. I want to make sure I get this bag from the contest. So I'm gonna make sure I do my back testing before I just jump in the trade, because I want to have some good results, because I actually want to be successful with my trades. So I'm gonna be patient, and I'd rather jump in late and catch a proper bag than to jump in late and lose my whole bag. So I'm gonna wait, and as I'm waiting, I see it's doing what I expected it to do. It's faked up, pulled back. Now it's deciding to come on down. Now we're back below the Bollinger Band again. Now I'm looking at it for real, because now I got another confirmation to see if it's going to check out. So here we go with the second part of the confirmation. I'm trying to make sure I go over this enough times to make sure we all get this, because once you understand this, it will help you see more blues. 100% guarantee. I guarantee if you wait for the confirmation, you'll see more blues than if you don't wait for the confirmation. I can guarantee you that. I can't guarantee you're gonna win a bag every time, but I guarantee you if you wait on the confirmation, you will see more blues than you'll see reds. That's for sure. So be patient. So again, we got the drop below the Bollinger Band. We want to come back up. We want to use our vertical line it up, bam, come back, get another vertical line it up on the RSI, drop it. When you drop it, you step away, you look at it, you say, I got 2 points down here. I got 2 points up here. Now you're looking for a divergent. After all this other stuff that I've been doing, which is basically called confirming that the action is doing what I expected to do, I'm looking at this whole area right here. Uh-oh, let me unfreeze. There we go. And what you want to do is you want to come over here and you want to get what we call a trend line. And you want to go from one point to the next point. And this right here is the bottom of the wick. You can't really see it because I kind of drew over it. But basically the reason why we're down here is because that's where the wick came down to. So you want to go from the bottom of the wick to the bottom of the wick, or if it was on the top, from the top of the wick to the top of the wick, but you want to go from wick to wick on the actual chart up here. Then when you come down here to the RSI, you want to get the same thing, a trend line, and you want to go from point to point. So we go from this point to this point. Now, I want everybody to pay attention because I'm going to ask for some engagement right here. Based on this line right here, this trend line I just drew, and this trend line I just drew down here, I want you to put a 1 in the comments if you think that both of these lines are going in the same direction. If they're not going in the same direction, I want you to put a 2 in the comments. Again, we're looking at this line right here, and then I want you to look at this line right here. A 1 if they're going the same direction. I mean, 1 if they're going the same direction, and a 2 if they're not. I see 2s. I see 2s. Good, good, good. I see more 2s. Ladies and gentlemen, I'm glad you can recognize that. Yeah, I believe somebody is. We're going to ignore that right now, Mr. Green. What we can do is we can ask everybody to mute the mics if you're not speaking, if you don't mind. We'd greatly appreciate that. But right here, I'm glad you all have put 2. Majority, I think everybody put 2, which means you've been studying, which means somebody finna get the bag out here. You feel me? Somebody finna get the bag, because everybody guessing, or not guessing, but giving the right, correct answers, which means you've been studying. But ladies and gentlemen, when you see this going one way, this trend line going another way, that's what we call a divergence, which means it's go time. Again, it's go time. That means we literally just had 1, 2, 3, 4. We've had about 3 or 4 different checkoffs that we did to go down the list to say, all right, now that we have the divergent, now that we know for a fact that we are below the Bollinger Band, just like we expected to be, 8 times out of 10, it's gonna do exactly what we expected to do and be what we call a good opportunity to place a trade, a buy at this point, because down here below the 32, the action that we need to see for a buy is for it to come below the 32. Ladies and gentlemen, do you see this below the 32? Do you see this below? Not necessarily below down there, but we have the point that we need, the red line coming down. Let me go ahead and remove these lines, and I'll leave the divergent lines or the trend lines down there, because I want you to see this from the chart standpoint. All right. I think I could have did that a faster way. Y'all bear with me, but those are pretty much the checkoffs that you need to have. You need to make sure that you have the Bollinger Band checkoff where the price is coming below. Once it comes below, then you're looking at, for to form you a nice little W. Cool. We got the W that we had drew up already. And now we see right here with the wick, that means that the price is wicking out. It's getting weak. And now we had the confirmation that we needed, which was for it to go ahead and be weak for a second, but then push down just enough for us to get the divergent that we need for when we draw this trend line, for it to be a divergent up here, or for it to be trending down over here. But as far as the RSI, be trending up, which means go time. It's time to get the bag. So you place your trade right here. You should be familiar with your MetaTrader 4 app, which means You go inside MetaTrader 4, you're in your GBP JPY pair. You hit the plus sign, depending on the device that you're using. You hit place a trade, and then you hit market execution or instant execution or buy by market. You should know the term that you need to know for your particular device. If not, definitely be sure to go back inside the recordings. We went over that and make sure that you get educated on that. But you're going to hit buy. You don't necessarily have to hit it instantly right here on the wick. You can even hit it right here somewhere. But you know that it's already checked off of your checkoff list. Keep in mind, this is 15 minutes. So for a whole 14 minutes, the price could have just been sitting right here. And then for the last minute, it could have just dropped down here, formed a wick, and then stopped all in 1 minute. But it's a whole 15-minute window for this right here to happen. So you might not even be looking at it fast enough for you to catch it on the wick like that. So don't think that you have to necessarily come in right here on the bottom or as soon as you see the V, because more than likely you're not going to see it happening that quick unless you're taking risk, which we don't recommend. So definitely be easy on the risk if you want to see all blue. But once you see that it's doing the confirmation that you needed to do, you go ahead and jump in for the buy. Ride it up. Let me see this question right here, Terrence. So when do you know when to buy or sell if have two different trend lines? So what we're saying is, based on the strategy, the way we're looking at it right now, because all the action is happening below below the bottom of the trend, below the bottom of the Bollinger Bands, we're looking at only buy opportunities right now. Meaning the action is below here. So we're looking at only opportunities for the price to go back up. If you look on the RSI, the price is down here below. Anytime that the price on the RSI is below the 32, you're looking for buy opportunities, but only when it's pointing back up. Not as if it's still pointing down, if it's flat, if it's chilling down here, if it's just going, if the line, let me just draw a line. If the line just happens to be on the RSI, just say right here where this point is at, if the RSI just decided to keep going, did I draw it? There you go. If it just decided to keep going down, keep in mind it's still below the 32, but it's still pointing down, which means the price is still coming down. So you don't want to jump in until you see confirmation. So once you see what you need to see with the confirmation, the price is going to actually point back up. Let me get this out the way. Once it stops, what is this? My computer moving slow, so I'm clicking on other stuff I shouldn't be clicking on. Bear with me 1 second. Get this to bounce out my way. There we go. All right. So you're waiting for the action. Boom. Like I said, it can point down. It can point down all the way down here to the point where it goes all the way to 0. We've seen it before. Meaning you think that it done stopped. It done came up a little bit. Came up a little bit. And then it decides, nah, we got a lot of bears in the market that's slapping the price on that. They just keep slapping it down. Anytime you hear about a bear, just think about the motion of a bear standing up on his hind legs and slapping you down. So the bear is saying, I see you trying to come up, but let me slap you back down. I see you trying to jump in this trade too early because you ain't doing your homework. So let me go ahead and teach you a lesson by slapping you back down. And then it goes down like this. And you went in the buy thinking it's already time to go up because you didn't wait on the confirmation. So instead, you wait on it to actually do this, go from there, and then decide that it wants to actually come back up this way. And once you see that V right there happen and it's pointing up instead of pointing down, that's when you know it's a good time for you to be looking for the buy opportunity based on all the other confirmation. So hopefully that answered your question, Terrence, about the when do you know when to buy and sell? If it did, you can put a 1. If it didn't, put a 2, so I can make sure we come back in and answer that, because if you have the question, somebody else might have the question. If they don't have the question tonight, it could be a question that they have when they're looking at the recording. So keep in mind, you're not just asking a question for yourself. Got it? Cool, cool. So that's that part. Again, I just wanted y'all to see that piece right there. We're going to go back into actually buying, and once you buy, what to expect. And this is where, outside of the confirmations, okay, so 1 second, y'all. Okay, so that last line you drawn, that's where I start. So basically what you're looking at, let me see. Let me slide this over. I'm trying to cut off. All right, matter of fact. I'm just trying to show a little piece of the screen, because I want to make it seem like the rest of the action hasn't happened yet. So y'all can see that I kind of cut off some of the action so we don't see what happened after this, right? Basically, you can see my screen clearly is the question. One, right? One means yes, two means no. I'm gonna keep it simple. One is yes, two is no. Everybody sees the screen. All right, so again, the price is coming down. You see red candles, it's coming down. Then you see blue. Again, this is a fake out. This is a pullback. Some people actually trade this. They are considered good traders because they know how to get in, get the bag, and run before they lose the bag. I don't recommend doing it. Anybody that's new, I do not recommend trying to catch a pullback unless it's a signal that's sent out from a master trader, or you consider yourself to be a master trader and you don't mind being a master trader who gets your head busted plenty of times before you actually become a master trader. That's on you, but I don't recommend trading the pullback unless you actually know how to trade. So you'll see we had the price action come down. It came back up. It came down. Now, the first confirmation was here. It was here whenever you seen that it came down below the Bollinger Band. Now, once you see this, you're looking at the RSI. You can also do this on your phone on the MetaTrader 4 app. You have everything set up the same way you set up your Bollinger Bands. You set up your RSI. You can literally draw a horizontal line. You can draw the vertical lines to make sure all this happens. And you can zoom in and zoom out on your screen if you need to have more distance. I know some of us have bigger fingers and stuff like that, so it's kind of difficult to do this, but you don't necessarily have to wait until you get, in front of a screen. I do, like I said, I'm a mobile person. I do this on the go all day, every day. But keep in mind, you're waiting on some confirmations. Again, it comes below the Bollinger Band. That's one check off. You're waiting patiently, meaning you can, like, literally, we have set alarms before where we're like, all right, every 30 minutes, set me an alarm to remind me to check on the trade. So 30 minutes go by, which is literally only 2 candles. Boom, we're here. Another 30 minutes, boom, we're going up still. Another 30 minutes, we're still here. 30 minutes retracement. Over the last hour, 2 hours, 3 hours, we're in consolidation, but it came back up. We're waiting for it to come back down below the Bollinger Band. And once it comes back down below the Bollinger Band, and then we start coming back up, what you want to see is the blue candle form and close. That's giving us a signal that now the buyers are in the market, giving us the chance to get in a buy. Now you're waiting on the first candle outside of the blue one. You're waiting on the second candle, should I say. You're waiting on your second candle, but the first candle that actually closes or starts to form inside of the Bollinger Band. Again, not the first one, but the one outside of that one. So the next one, you see the next one is a red candle. It formed and it came back below, and then it stopped right before it got over the Bollinger Band. Then the next one, the candle part of it, if you look closely, you'll see that the candle part did not quite make it over this Bollinger Band. It stopped right before it got there. Then the next candle, it started to go up. For me, that's market execution right here. I'm in. I'm jumping in right here. As soon as I see this candle right here, oh, we over the Bollinger Band. It checked off as far as my trend line coming down here. And then my trend line on the RSI is going up. That's definitely a divergent. I already know based on the strategy that it's 80% chance that it's going to be accurate. So I trusted enough that once I see that the candle is forming here inside of the Bollinger Band, it's time to get in. So that's a buy. And from there, what you want to do is you want to set your intention for your actual target is going to be this middle level of the Bollinger Band, this red line right here. Your line might not be red, it could be white. So if you're watching the recording, it doesn't necessarily have to be the same colors. If you're using it, okay, I got you. I'll come back and answer that. If you're using this on a different chart, it might be a different color. Like when I go over here to the harmonics, not the harmonic scanner, but when I go over here to the trading view app, then that's going to be a whole different layout. So don't think about colors, just think about the line. So the middle line on the Bollinger Band, you're waiting for the price to get right in this area, and then you can take profit. You can take profit at any point once you get in blue, but the goal, the understanding based on the confirmations and the strategy is that 80% of the time, if you have this come below the Bollinger Band, come back up, come back down, you form that W right there on that Bollinger Band, it's going to be a buy opportunity, and it's going to at least go to the middle level. Does everyone see? Put a 1 inside of the comments, and I'm going to come back to the question, Dion. Put a 1 inside of the comments if you see that the price came from down here, outside of the Bollinger Bands, right back inside, at least to the middle area, which is the 50 level, and close. Not necessarily close, but it came right back in this area, which is where you could where you're looking to actually take profit at. I got ones. Great, everybody sees that. Let me go back and check out this question. You said divergent a few times. What does that mean exactly? Divergent, what it means is that as far as the actual chart goes, that the price, the action on in the chart, as far as when you draw a trend line, which would be these lines right here. Let me get back over here, draw a trend line. So that means whenever you look at drawing your trend, as far as up here on your chart, right here, you draw that trend line, and then you have to come down here to your RSI. Then you have to come down here to your RSI, and then you draw that trend line. If they're both going the same way, I'll show you here in a second. If they're both going the same way, let me give you an example right here. I'm going to change the color of this, and I'm going to turn it to red so anybody who's watching the recording understands that this is not what you're looking for. Again, the red means this is not what you're looking for as far as the trend line that I'm getting ready to draw. The green means that is what you're looking for. Green and blue, bag, red, and whatever we want to associate with bad, then that's going to be bad. So if it does this with the trend line here, and it's below, one of them, you see one of them came below. One of them came below the Bollinger Band. This one, it attempted, it faked it out. It made it seem like it wanted to come below, but it didn't. Then you come down here, again, you use your points. I'm gonna go ahead and draw it up just as if we was drawing up the actual good trade that we was looking at. So I'm gonna go ahead and draw it up as if we was getting ready to jump in this trade.
And Jamie, just for a second, while Jamie is doing that, guys, I'm going to reiterate that you want to make sure that you are reviewing your IML TV, okay? What Jamie is doing here tonight is giving everyone that's part of the summit an opportunity to ask questions in a little bit more detail, a chance to see it from a different, maybe just different terminology, a different person explaining the information, but this is not the place where this is the first time you should have seen this strategy, all right? So make sure that you are following the summit requirement so that the summit is as valuable as we know it can be. So back over to you, Jamie.
Right. And again, like I overstand the I understand how it can be overwhelming to be in a class of hundreds of people, or being in a group with hundreds of people who are, asking hundreds and hundreds of questions to the mentor, to the educator, and your question just gets overlooked. So it's like, dang, I didn't get the question answered that I wanted. I done stayed on all night and I didn't get the chance to ask the question and get it answered. So this is not that. This is your team who are here to help you win. And we have set up time outside of our schedules to make sure that we're available to help you. The only way we can help you is by engaging with you and understanding that you're needing help in this area, or you don't need it, and we can just continue to do this. Or you need help in this area, let us slow down, help you understand it so that you don't have some issues, to help you, move forward. So feel free to ask them questions, because that's what we're here for. Because once we get inside these trades for real and it's go time, don't ask me no questions, because I'm going to tell you, you might want to go check the recording that we did 2 weeks ago. So that's just how I operate, which is why y'all don't see me on the camera too often, because, I'm straight gutter with mine. You know what I'm saying? I'll let you know, like, look, we're here to get the bag, not learn what a trend up means. You know what I'm saying? So that's what this is for now. We're here to give the education now. So if you have a question, feel free to ask. So to answer that divergent, or to finish asking, was that it, Trace? I believe so.
I'm sorry. Yes, that's it.
Cool. So the red again means this is not what we're looking for. This is not what a actual divergent is. So once you come over here, you draw your trend from the bottom of this wick to the bottom of this wick. This is just the one we're using because it came the closest to the to crossing the line, crossing over the Bollinger line. Then you come over here and you get your other trend line, and you draw it from the bottom of this one, from the bottom of that point to the bottom of this point. Now, when you look at it, did it come below the Bollinger Band? Yes, it did. That's one checkpoint. It came up, did the pullback, then it came down. Then it came back up, then it came back down. It almost did it. Is this a good time to try it? Maybe. Let me try my luck. So you jump in, not jump in, but you mark it off as an actual trend line to be looking at, and then you come down to your RSI, and then you make your trend line here. When you look up at this line, you circle this line. Let me highlight this line, this red trend line at the top, the red trend line at the bottom. I'm going to ask everybody in the comments. I'll come back to that question, Judy. Everybody in the comment, if you think that this right here, this line at the top in the chart and the line at the bottom, if they're going the same way, yes means one, or one means yes, two means no. Put your answers in the comments for me if you believe that these are going the same way. Okay, I don't see any twos. We got engagement. Everybody's here. Cool. All right, so that is not a divergent. It's pretty simple. The lines, as far as the way I look at it, now I'm gonna let Tracy break it down as far as the actual terminology, because that's what Tracy is. She knows it like that. I'm the person that knows visually. I can see it. I understand it visually. I can show you what it means, but I can't necessarily give you the actual definition by the term. So I'll let Tracy give you that. But if you can see that this right here is going the same way as this, that is not a divergent, which means this is not a confirmation for me to be in this trade. Even though if you look at it, it goes up to right here, and it does hit the next at the actual top Bollinger Band. But if you actually look at it for real and you see it right here, if you get in this trade, I'm gonna just draw a horizontal line through right here, where just say we made a confirmation that we want to jump in this trade right here. It's going up, so let me jump in right here. Make this bigger, change the color of it. We'll make it black. All right. So let's say you jump in this trade right here because it came below the Bollinger Band. It's blue candles forming. Okay, I think it's gonna do what it's gonna do. So you jump in right here. Boom. The next candle comes up, wick forms, comes down. If you're doing what you're supposed to do, which is using 10-cent lots, I mean, yeah, 10 cent loss, 0.01, then this might be, you know, a profit of from zero. Your 10 cent might turn into 20 cent, 30 cent, 40 cent, 50 cent, come back down, stop right here at 40, go up 50, come back down 40, 30, back up to, you know, sitting there at 35, 35, 35, 35. It's just consolidating now at this point. Then it comes back down. Now you're negative 30, 40 cents. Come back down, consolidate. Now you up, back to even. This is basically what you call consolidation. You don't want to be in the middle of this. This is where you get stressed out at, especially if you put a bigger lot size than you're supposed to be leveraging. You come in here, you put in a $10 lot size, a standard out here, and you get in right here, you're going to see it go up to $20 right here in one pump. Then it's going to go down to negative 20, positive 20, negative 20, positive 20. It's just going to keep going back and forth. This right here is this is an hour and a half, 2 hours right here, 3 hours. Between these two lines, it's like 3.5, 4 hours of you just going up $20, down 20, up 20, down 20, up 20, down, because you wasn't patient to wait on this move. So you up 20, down 20, up 20, down 20, up 20, maybe 30, 40, 40, 40, 40. Then it goes down. Now you negative $100, $200. If you're doing the wrong, you know, standard lot size and stuff, you negative now because you didn't wait on the confirmation. When the confirmation is literally hour, 2 hour, 3 hour, 4 hour, 5, 6. This is like literally a half a day later that the actual confirmation happens. So when you understand patience and you understand that this isn't a divergent, you don't get in right here. You save yourself the headache from getting your head busted, number one, or from even just being in this trade like, okay, when can I get out? When can I get out? When can I get back to even? Does everyone understand the point of waiting, being patient, not getting caught up in the middle of this consolidation and waiting on the trade to come to you and then riding the wave? Did I answer the question, Dion, as far as the consolidation? I mean, as far as the divergent. Tracy, if you don't mind, please come on in here and give the definition of that.
Okay, so the definition, right, of divergence is that it's indicating a reversal, right? So as you can see on Jamie's chart on the price action part, right, the price action part where the green line is going downward, down from the top left down to the bottom right. It's going that direction. And then in the RSI part, it's going up from the bottom left to the top right. Because those lines are opposite, what that means is that there is a high probability for a reversal in price. That's why you want it to be divergent. If it's not divergent, then that's not a high probability trade, right? Which is what we talked about. You want high probability. So if you have the divergence, which is one part of the confirmation, and then you have the two candles coming outside of the Bollinger Bands, right? That is a second confirmation. Third confirmation is in the RSI, you have the RSI line below the 32. It must be below the 32, okay? That's a third confirmation. With those three confirmations, guys, you have a high probability chance that your trade is going to go the way you want it to go. So all divergence really means is that when the RSI goes one direction and the price goes another direction, that is a high indication that a reversal in price is about to take place. Mr. Marine, I see.
Hey, you see what I'm saying? That's what teamwork is all about. I hope that made a lot of sense. It definitely made a lot of sense to me. It helped me understand it a lot more as far as being able to give someone a definition. But from your boy, I'm just going to say, you see this right here? You see this? That's what you need to know. And because it's really, you know, it's here, and then understanding in your mindset exactly what it means. But it's visual. Like once you start seeing this over and over again, you're not even going to need to draw it up. You're not even going to need to really have these indicators or nothing. It's just going to be eyesight. That's why I say I'm a person who can actually just see it versus having to actually know the actual terminology. But knowing it and understanding what it means actually keeps you in the blue. So that was answered. I went back to your statement, Judy. Yes, loop. Hey, repetition. That's what this is all about. And I guarantee you, if you look back over and over and over again throughout the chart, you'll see it. And we're going to make sure that we do it so I can show you that. So again, this is not what you want. The red is not what you want. This is not a divergent, although it did come below and it attempted to come below the Bollinger Band. It didn't. And then to confirm that it's not a good trade to get in, we didn't have a divergent. Now over here, several hours later, we actually have the action that we want in the price. It comes below the Bollinger Band, goes back up above, comes to this 50 mark. Let me go ahead and draw the trend. Let me draw that up real quick just to give y'all a visual of what that 50 mark means. Field retracement. So if we go from here, did I do it? All right, boom, boom. All right. Just so y'all kind of understand what I mean when I say 50 visually. All right. Technically, didn't mean to move that. 1 second. All right, this right here is a field indicator. Again, make sure you do your research. This is not a part of this educational course today. This is just something that I'm using, so I want people to kind of understand what I'm saying when I say 50. Right here, this black line is 50 out on the Fibonacci. So when you come from this top line and you draw the Fibonacci down to basically you have your high, your highest point at this point right here, from going from here to here, going across from this consolidation, we have the highest point that we're using to mark up down below to the lowest point. Once you have these 2 points, go ahead and bring the chat back up. Once you go to these 2 points, you'll have these numbers that'll come up. This is showing you right here, from this top, the high to the low in this area, because right now, none of this has happened. Anything outside of this chart, outside of this fib that I just drew up, we're gonna act like none of this action has happened yet. All we see is the price. All we see is this drop, this bear push down right here. So we mark it from here, the highest high, the highest point, to the lowest point. That's your high and your low. That's how you draw a fib. Draw it from the left to the right. You get here, and if you look at the chart, the black line I just put on, the trend, horizontal line going across, I put it on the 50. If you pay attention right here, it dropped below the Bollinger Band, and then the blue candles came up all the way to the 50 point. And then that's when you see it start weakening out, below, come back up, try to cross that 50. This right here is a level of resistance right here, this 50. Now we see that this is resistance. It keep coming up, try to come up, couldn't come up. Now it keeps coming down. So that's what I mean by the 50 mark. It went 50% up, because another 50% would be right here where it was at, right here where it came from. So the 50, it came to the 50, which is where we're looking at an area for a reversal. And then it started coming back down, and you can clearly see it right here. Bounce down below the Bollinger Band, come back up 50%. It's not always going to do 50%. That could have just came right here and then dropped down and then did the same thing that we needed to do. I'm just showing you that it matched up almost perfectly to what we need to see when we're looking for a good trade, with the 50% retracement, the pullback, and then drop below the Bollinger Band, then goes up. So that's the fib. Again, be sure to do your research. Go back through the IML Academy. They break that down to the point where you will thoroughly understand it as long as you review it. So then we get in the buy zone. Oh, I should have left it up. Matter of fact, I'm going to show you how I actually go about setting my take profit. Now, again, this is my added strategy to getting my take profit again. Before you even get in your trades, let me bring the camera back up so I can make sure I can see what's going on. Before you even get in your trades, you need to already have in mind, before you even start doing the stuff that we did, okay, my goal when I get in a trade is to get X amount of pips. What is that number for you? If you understand what $1 is for a pip, $1 a pip, we'll just say 10 cents. 10 cents a pip, that's $1. 10 pips, 10 pips at 10 cents is $1. Understand? So if you do, it's just easier to go with $1 for me to just keep it simple. If you got 10 pips that you're looking to gain and you're placing a trade of $1, if your goal daily is to gain $10, all you need to do is get 10 pips out of this one trade. So you need to understand before you even get in the trade that mental wise, you need to know, okay, my goal is to get daily. It doesn't necessarily have to be in this particular trade, but daily, my goal is to get 60 pips. And if 60 pips, I have to get 3 trades in, and those 3 trades need to equal up to 20 pips each. That's still 60 pips at the end of the day. I just need to put 3 different trades in. So understand it don't have to necessarily come in the same trade, but in this particular trade, you might see an opportunity for you to get 20 pips. So if that's the goal, you come in here and you will mark up what 20 pips look like. Let me show y'all how to do that based on doing it on the chart. All right, so we come over here to some of our tools, our indicators. We have the measurer right here. You grab the measurer and just say we go from the bottom of the wick. No, we're not gonna go from the bottom of the wick. We're gonna go from a good price point for us to actually enter this. So we saw it come up. We saw it come back down a little bit. It didn't close over the Bollinger Band. Now it actually started forming over the Bollinger Band. Let me find out. I'm gonna probably get in somewhere in here. So what you do is you go from here. We just said we got in right there. This blue action isn't here yet. All this oh, my chart moving. 1 second. Everything that's gonna be behind this area that I'm marking up, we're gonna act like it's not happening yet. So I'm gonna slide this over a little bit and do this again. All right. So everything behind where I'm drawing hasn't happened yet. So we're just, I can't get it to mark up. Okay, here we go. I got it. So let's just say your goal is here to get back to the 50 that we drew up on the Fibonacci a while ago. This right here, correct me if I'm wrong, Tracy, from here, we go from 9, the point in front of the 9, over 2 right, 2 to the right, and that tells us how many pips we just got. Confirmation from Ms. Walker here.
Yes, sir.
So from this pip, when you look at, to count how many pips this is from basically right here where we would have entered. And we expect, we don't see this yet, but we expect the market to rise, or the price to rise up to at least where the last point of resistance was, which is the 50 right here from the last level that we marked off. If we did do that from where we currently got in at, that would end up being 90 pips. Because you come from the decimal point, you go over 2 spaces to the right, that's 90. So that's 90 pips that we would have just came just by getting back to the 50. That's your goal. So at the end of the day, once you see the price happens, like you're not seeing this happening yet. You're just expecting it based on your confirmation. We got confirmation 1, confirmation 2. We come down here to the RSI. We got confirmation 3, confirmation 4. It's go time. You hit buy. You hit buy. None of this over here has happened. Anything outside of, matter of fact, let me just slide it over. Let me slide it over so we can't see it, so we can make sure we don't know it's there for right now. All right, so again, we came in. This right here is the candle we got in. Slide over just a little bit. Matter of fact, I'm gonna draw another line and I'm gonna make it green for us coming in right here, so we can all keep up with the price that we're coming in from. And I'll be through with this one chart here in a second, just to show this one example, and we'll keep moving. All right. So I gotta get my computer sped up or something. This is killing me. All right. So this blue candle star forming, we get in on the trade, market execution, go. It just came back above the Bollinger Band. We don't see nothing else besides this candle right here. And we don't even see that this top part is, we don't see anything above this green line yet. We just see that this candle start forming. I think it's gonna do what I needed to do. Now, ideally, you wanna wait for this candle to actually close over the Bollinger Band. Like I said, for me, a risk taker, I get in as soon as I see what I need to see, but you don't have to get in right here. It's still opportunity for you to get in and catch the same amount of pips that I would catch if I got in right before you. So it's not like just because I got in at a certain point and you get in after that, that it's still not a potential for you to catch the same bag, if not more of a bag. So never feel like you coming in too late, but you do want to always keep in mind that you need to look at the chart, analyze it based on whatever information is given to you, because it's still, you can come in late. Now, don't get it twisted. But based on this, let me bring this back out so I can make sure y'all see it visually. This is where we came in at. This green line is where we came in at. Before this happens, before this actual movement happens, we know that we expect, based on this line right here, we expect the price to come right now, based on from where this green line is to where this is at 0.879 or 0.8 from 0, from where we're at right here, 0.879. We want to move the decimal over 2 places, which means I'm gonna go ahead and ask y'all. We're finna test y'all's mental real quick. See if y'all still keeping up over here. If y'all done went to sleep on me. Let me see if y'all sleep out here real quick. Go to the chat. Bring the chat back up. All right. Question. Let me bring my chart back up. Hold on now. All right. So right here, this area right here, you see we have 0.879. How many pips does that equal? Please make, okay, we got one who says 87 pips. Got another one who says 87 pips. Cool. All right. 87, 87. All right, cool. 87 pips, ladies and gentlemen. That's how you mark up. And that's easier to do it on, the charts on the computer, because you can actually measure what you're looking for. So now we slide this to the right. We slide the chart over to the right. Dang, I think I just messed it up. Well, we know based on what we just drew up where 87 pips is at. So keeping that in mind, the black line is 87 pips. From the green to the black, that's 87 pips. Now we're live in this actual trade. 1 second, I'll answer that question, Judy. We're live in the trade. We got in right here. We coming up, boom. That's, several pips. Now we hit the black line. Guess what? Your game plan was to get, before this happened, your game plan was for you to get 87 pips. So you can either, before this trade actually takes place, you can have your take profit set for right here. Once it gets here, it's going to take you out the trade with whatever profit you would have gained. In this case, if we would have did $1, that would have been $87 from here to here. That's $87. what I like to do, because I'm actually paying attention to my trades, you know, like I said, every 15 to 30 minutes, I might look and see what's going on. What I like to do is, once, if you pay attention, this candle right here, this is a 15-minute candle. So this 15-minute candle, it didn't close until it got right here. If I already marked up my chart and I'm looking at my chart, I see that right here is the 50 level. This is my goal. Once it gets here and it goes above my 50 line, or not necessarily my 50 line, but in this case, my goal of 87 pips, and it continues to go above it, now I do what we call a moving stop loss. So I put my stop loss, I already got my 87 pips now. So I set my stop loss right here now, which would be 149.251. That's my new stop loss. So if it continues to go up and I'm watching it, at this point, this is an extra bag that I can get. I secured my 87 pips already, so if it happens to want to come down, so be it. But I got my 87 pips. That's what you want to get used to doing, making sure you secure the bag. But I do have an opportunity to stay in this trade, so I don't necessarily set the take profit sometimes unless I know I'm going to be asleep. Then I set the take profit. But if I'm literally looking at the trade, I'm watching it, it gets above my actual take profit that I desire, I stay in the trade. I come back up here from this black line to this to that mark. Let me go ahead and mark that up just to give you an example. If you would have stayed in this trade up until it actually wicked out up here at the top. So we're going to get this number, and we're going to give y'all the opportunity to give me some more engagement. So we already got our 87 pips. We're just going to say Judy decided she wanted to stay in the trade. I decided, I don't know, Judy, it might not go any farther. I'm going to go ahead and take my bag. But since you're a risk taker, Judy, you can go ahead and stay in. We already got 87 pips. You already have it locked in. You want to see if you can get some more because you actually want to you want to stay in this pair. So you decide to stay in. I got out. I got my 87 pips. You got your 87 pips, but you want to get more. So you stay in. You come up to here. And then you see that it's about to turn out, it's wicking out. Well, the wick out was up there. So we're going to say you got out as it actually formed the candle before the wick. The wick just made you say, okay, it's getting weak. Let me go ahead and secure my bag now. So you just earned in the chat, ladies and gentlemen, if you don't mind, participation is key. You see the numbers right here. How many pips did Judy just gain on top of her 87? We're going to add all of them up together after we decide what is 0.641. Okay. There we go. We got 64 pips. Everybody's accurate. So Judy just added 87 plus 64 pips. What's that math for me, somebody? I would do it off the top of my head, but if I get it wrong, I don't want to look crazy. There we go. 151 pips that Judy just got because she decided that I understand how to read the chart. It actually can go up a little higher. I already got my goal for the day, but it ain't nothing wrong with getting extra money. You know what I'm saying? There's nothing wrong with that. But that's not called being greedy once you secure your bag. Being greedy is not securing the bag because, you know, you just out here just doing some random stuff. But if you actually have a game plan, which is, I know for a fact that it's going to go to this point. That's my goal. If it actually goes up above it, I ain't mad at it. You know, shoot, I take that bonus. Let me give myself a bonus for the day. You know, that's how you want to look at it. You are your own boss. You paying yourself. So if you want to give yourself a bonus, cool. If you want to just take your regular $87 commission today, put it in your pocket, go to sleep. Cool. Let me see. Is this your favorite strategy? I definitely apply it to most of the stuff that I do, but I'm more of a scalper. So I like to be in the 5-minute chart so I can see the action happen a little bit faster. But the 15-minute chart is the best as far as trading to get more accurate pip count and stuff like that, in my opinion. Not just trading on the 15-minute chart, not necessarily drawing up. Now I draw up everything on a higher time frame, like, you know, maybe the 4 hour and the hour, to make sure that the trend is going a certain way, because I do scalp. So I need to make sure I understand which way the trend is actually going before I even get in the trade, because I can get in the trade and not see none of this and catch 10, 15 pips and in and out, you know what I'm saying? But at the same time, I can look at a trade and not look at none of this and lose 30, 40 pips and have to put more money in my account. So understand the difference. This is definitely the best strategy, the 15-minute window that I would recommend for anybody who's new to trading. It definitely makes a lot of sense for you to go ahead and master this, because it's literally 80, 90% chance that you're going to get an accurate, way of looking at your pip count. Like I said, I just showed you by doing the field. Everybody don't teach the field. I like to use the field because it kind of gives me levels to mark off. And then I can just kind of go back and look at it like, okay, we got above this level. Let me make this my new stop loss. Or we got above this level. This is my new stop loss. We got above this level. This is my new stop loss. So that's how I kind of secure my bag. But this is one chart, Euro GBP. I literally got in this trade today earlier. Whenever the market opened, I got in GBP. I got in Euro JPY and USD JPY. I jumped in with 20 cents, 20-cent lot sizes. I didn't necessarily use this strategy. I more so used the gap trade strategy, meaning I seen the gap in the market today, and I decided I wanted to go ahead and jump in there real quick. Where's the okay, I'm finna show y'all. Just to give y'all some examples of not being afraid of jumping in here and getting the bag. Sometimes you have to have something in your account to actually do it, but I don't know if this is showing up. I always do that. My screen be too bright or something. Let me see. I'm in some active trades right now. Still don't see it. Can y'all see that? Let me see. You can't really see it. I know I can't see it, so y'all might not be able to see it. I don't know why my screen's so horrible, y'all. I apologize. But all you need to see is blue. You feel me? That's what you want to see. You want to see blues versus reds. And this is definitely my live account. Again, this is the pairs we're looking at. I didn't necessarily give a trade yet because I wanted to show you all how it actually looks so you can understand how to read the chart, because if you don't understand how to read the chart, you're not going to understand how to accurately place a trade, set a buy, set a stop loss and set a take profit. And when it, just to give you an example, when it comes to stop loss, so for instance, we came in right here on the green. We're going up, but say for instance, it started to come back down. It didn't necessarily come all the way down here, but it's coming down, wicking before it goes all the way up. It don't instantly happen all the time. Sometimes it might have a little consolidation and then go up to this middle line and take you out. Keep in mind again, because I did kind of I kind of went over, I added my strategy to how I kind of go about doing this versus the actual strategy. The actual goal is for you to at least have your take profit here. So let me actually put that in. Let me put a gold for gold. Let me put that color in there for you to understand this is what you're looking for based on the confirmation. This is what you can expect to happen 80 to 90% of the time based on confirmation. So based on confirmation, make this a little bigger. Based on confirmation, you know that you came in here on the green. Let me get my measure out. You came in here on the green. Confirmation says that it's going to go from the bottom Bollinger Band, at least from the bottom Bollinger Band to the middle Bollinger Band. If you stayed in, if you actually set your take profit to this area right here, it might not necessarily be right here. It could be up here. It could be right below it. But if you set your take profit for here, from the green to the yellow, we'll try this again, ladies and gentlemen. Y'all been getting, can we get 3 of them? 0.0494. What is that? In pips, 49 pips. There we go. There we go. We're getting these numbers right. That means we understand how to calculate pips. That is key. If you understand, if you have the power to get 49 pips every single time that you get in a trade, if you only get in one trade a day, and you get 49 pips. If you understand proper risk management, you wait on this setup, only one setup, 49 pips. If your goal is to use, at this point, is understanding how much you have in your account and how much you can actually leverage in your account based on those 49 pips that you've mastered how to attain every single day that you get in the trade. So if you master getting 49 pips, then it's like, okay, if I do if I have a $1,000 account and I decide to do a standard, which is $10 times 49 pips is what, ladies and gentlemen? I'll wait. $10 times 49 pips. $490. $490. Every day I've learned a skill how to turn $10 into $490. Ladies and gentlemen, that is what you want to master. That's why everyone always says something about pips, understanding how to count pips, not necessarily, oh, I want to make sure I make $490 a day. Well, $490 can look a whole bunch of different ways. But if you actually know how to draw it up and literally wait for it to patiently come in, it's like you're setting a trap. Look at this, look at all this drawing up we just did. If we're drawing this up, if we're literally analyzing this chart before it happens, we see, okay, this is about to take place. All right. Okay, yeah, I'm waiting on you. And I've been saving up this week too. I put an extra $300 in my account. I'm finna go in. I know this is about to happen. Now it happens. Boom. And I decided I put, I didn't got my taxes or something like that. I got $2,000 in the account. I'll risk $20 real quick. I can lose $200 and it's not gonna hurt. So if it go the wrong way, but if it go the right way, ladies and gentlemen, what's $20 times 49 pips? I'll wait. Whew. Double. $980. That's $1,000 a day off of $20. Do you understand the power of learning the skill, how to draw up, analyze some charts, actually take some trades with your actual demo account so you can see it play out over and over. That's all it is. It's a chart. It's going to do the same thing over and over again. You just got to understand how to get good entries and exits. And this right here is literally a strategy that master traders have confirmed over and over again, that I've seen myself confirm. We all just confirmed it right here together, that if it does this, it's going to do that. If it does this and it looks like it's going to do this, then it's probably not going to do that. So you don't want to probably win. You want to always win. So always take good trades. Like they say, high probability trades. Looking at the clock, let me see what we're looking at time-wise. It's 10:13. I don't know if I need it. Tell me how much time we're looking at Tracy. I don't want to overgo or overdo the timing. I could definitely look at one more chart just to show them if we need to look at one coming from the top to the bottom and just kind of go through it faster without explaining it. But if we're good with what we got, if we have any questions or anything like that, we can go through that. Just let me know where we at.
Okay, well, I think, if you want to do it from a sale perspective, we kind of set up and just show it. I think that'd be a good, just for the visual eye, for everybody to see it. I'm
gonna go to trading view too, so I can.
Right.
So I can go to the one I like.
Yeah. So far, everyone is like, this has been a wonderful. Patrick says wonderful job. Tyree said very good session. Shelly said thanks. Jamie, Judy said this is fantastic. Terrence said dang good teaching.
Thanks.
And a few of these people are brand new, right?
Hey.
Brand new. So awesome job.
I like that. Appreciate it. I appreciate you all bearing with me and my slow computer. I am in Tallapoosa, Georgia. Yeah, I'm out here in the country. In other words, y'all don't be laughing at my city. We produce some good offspring out here, obviously. So we straight. Let me see what's going on. Bear with me one more second. If I can't get it to come up over here, then I'll just go ahead and go back to harmonic scanner. And the harmonic scanner is a great tool as well to give you actual trades to look at, because sometimes, just giving you an example, again, this is the only reason why I was in this trade already today is because I looked through a couple of different trades to see what was a gap trade to look at. It happened to be one to look at, and because I was already in and winning, I already knew that it was worth us taking a look at as well. But the harmonic scanner, when you're on the harmonic scanner, let me just show you. When you're on the harmonic scanner, you want to hit. I prefer to use the actual trading account or the trading the brokerage account that I'm actually currently involved with, the one I use the most to actually look at trade setups. The harmonic scanner is going to give you some different options. Instead of you having to look at every single pair to see what you want to look at, it gives you some good options to look at. Now, keep in mind, this option isn't necessarily for, it isn't specific for the actual strategy that we did. It's just specific to giving you good pullbacks that's happening in the market for you to get in on the potential pullback or, reversal or some other things that happens in the marketplace outside of the one particular strategy that we focused on. I was just telling you that if you didn't really know of any good pairs to look at, these right here are just like, you can hit the little 15-minute window or the hour, 4-hour day view, but you can click that and it'll give you the 15-minute version, like Euro JPY, for instance. We'll open that one up. It'll give you another chart to just look at. And of course, it's going to give you these patterns. Of course, all this stuff has already happened, but right now we're just doing this for educational purposes. So let me see, it's still going down. All right, here we go. Here's another one. Another buy opportunity right here. We did say look for a sale, didn't we? Oh, let me see. I'll go to a sale here in a second. One quick second. But this one right here is pretty obvious right here. I think everybody can see this one from the naked eye. Spread it out a little bit. Come on, try it. Work with me, okay? Y'all
All right,
see it?
we still see the scanner right now. But while Jamie's pulling that up, guys, here's what I want you guys to keep.
Yeah, I'm on the scanner.
Oh, you supposed to be on the scanner?
I just went to the scanner because I know this one right here was taking a second, and I was kind of explaining something with the scanner, just as far as looking at different trades, just having different options that kind of hone in on better trades to look at instead of having to look at, like, wondering what pair to look. Now, keep in mind, the strategy that we just showed you all is something that you can do on any trade, any chart, even with cryptocurrencies as well. It's the same kind of strategy. It just works a little differently. And the market is a little bit more volatile, so it moves a lot faster, and it can get pretty ugly real quick. So that's the difference. But go ahead, Tracy.
Okay. What I was going to say was, guys, for this week, right? For this week, we want you to try to stay as focused as possible. All right. And that's why Jamie is taking this time to go over this particular strategy, because we do believe it is one of the more simple strategies to implement as a completely person with completely fresh eyes to trading in the market. So we want you to stay focused. You're going to be exposed to different strategies, and it's okay, but we don't want you to overwhelm yourself, and overwhelm is trying to do too much at the same time, right? So we want you to focus, which is number one. Number two, if you study Luke a little bit, he'll tell you that he really only looks for this setup on 4 different pairs. It's not that it doesn't occur on all pairs. It's just that certain pairs produce this pattern more often, and it gives you the greater upside. In other words, you have more pip potential in your trades. So I'm going to share with you those four pairs in case you missed them. Write these down. So as you're going through each day for the rest of the week, if you're implementing this particular strategy, you want to look at Euro AUD, You want to look at GBP USD. You want to look at GBP JPY. And you want to look at GBP AUD. I'm going to put them in the chat as well. Okay, so that way, in case you missed them, don't worry. I'm going to type them in the chat. But the reason why these are narrowed down is because you've got to, the whole point of being part of a community such as iMarkets Live is that you get to leverage the expertise of the master traders, right? And so if a master trader says, listen, I've tested this out 100,000 times, and what I found is that you're going to have better setups with these 4 pairs, then make your life easy. Focus on those 4 pairs. Okay, so focus on those 4 pairs, and then crypto pairs. Well, we won't get into that. We want you to stay with Forex right now. Just to stay with Forex. Okay, it's a whole different.
Yeah, that was my bad on that. Like,
all right, so you can see the pairs in the chat there.
The best thing to understand is if you can hone in how to read a chart and know how to analyze the chart and make proper trades in Forex, you will smash crypto. So once you learn Forex, then you can step into crypto. But until you learn Forex, I personally don't recommend jumping into crypto. I literally caught a $2,000 bag in a day and lost it in the same day. Like, don't get your head busted if you don't have to. All right, I digress. Oh, is it back on me?
Oh, yes, sir. Sorry about that. Yes, I'm sorry. Back to you.
Oh, my bad. Okay, my bad. All right. I was just trying to look for a buy opportunity. I mean, a sell opportunity. Oh, let me go back over here. I think one of them is slowing down. The other one I might just close. Trading view down. Yeah, I'm gonna trade. I'm gonna close it down. We already got our money scanner rocking. Oh, we coming up. We get another pair. We try to find us a sell opportunity just so I can show y'all the reversal. The key visually that you would see inside the chart, if that wasn't there, you would be looking for W's. Again, when you're looking at a buy opportunity in this particular strategy, you're looking for a W to form, and based on that W, just like I showed you all, it'll come down the first of the V part of the W, it'll come back up, make that 50% retracement, somewhere between 23 and 50%, and then it'll drop back down below the Bollinger Band. That'll form the second V for your W, and from there, the last the up part of the W, the last part of that, that's what you're riding. You're literally riding that line that the last part of the W is being created, and you want to set your take profit. It's easier to set your take profit based on the field, but if you literally come into it with a actual strategy of catching, again, like we just went over, 49, if you just had a goal of 49 pips a day, or each time that you get in a trade or each time that you trade, then you already know that 49 pips times whatever the desired lot size you decide to put it to, as long as your account can do it, you just want that to play out. Just let it play out. You don't have to necessarily watch it and, set stop losses and moving stop losses and all that. You don't have to do any of that. You can just literally just put the trade in, set your one stop loss, set your one take profit, and wait for one or the other to happen. That's really what you should do, because you're actually placing this trade based on what you believe is going to happen. That's one thing I wanted to touch on too real quick with the mindset. A lot of people, when it comes to not just this business and this opportunity, just trading, but mindset wise, they see things by sight. And if that don't make sense, they see things based on only what they can see visually, like results, tangible. They don't necessarily see things by faith. And the way that you want to see things is you want to first see it by faith and then believe it and understand that it's going to come into fruition. Understand that the faith that I have in whatever it is I'm doing, I know without a doubt this is what I believe, this is what I expect to happen. So if you have faith in your trade, that means you literally studied it, you understand what's going to happen. It ain't no need to set a stop loss. You don't even have to set it. I ain't saying that. Disclaimer. Set a stop loss always, but as far as this point that I'm making, you should have enough faith that if you're making a trade, you expect this to happen. So there's no need to have to set moving stop losses and stuff like that. I was just trying to show y'all, once you get to your take profit, at that point, if you wanted to stay in the trade, from there you can have a moving stop loss to actually, because you didn't actually plan out the rest of the part. Now you're just in a trade and just trying to catch an extra bag. But keep that in mind when it comes to trading, when it comes to just mentality, when it comes to dealing with people, especially when it comes to dealing with people. A lot of people, when it comes to this business, we're going to have conversations with people. And, well, what is your results? My results is I just started learning this 2 days ago. But the results of this person over here is phenomenal. And they're showing me how to do this. So I know what's going to come in the very near future. I know what to expect tomorrow and next week. I'm going to keep learning until I get those results. And I expect to get those results because I have faith that the leadership is going to show me what I need to know. And I'm going to take the time to invest in myself and educate myself to make sure I hone in on this skill so that my faith brings forth the fruition that I wanted to bear. So at that, I'm done with that part. I just want to speak on that little piece real quick, man, because some of us need a little faith check. You feel me? I digress. For the sake of time, Trace, I don't want to have everybody up all night trying to find another trade with my slow computer. I think everybody's been doing phenomenal tonight. I've been asking for feedback. You've been giving the feedback. You've been participating. Y'all can tell me 1 for yes, 2 for no. Do you feel like when you have actual engagement that you really learn more? I'll wait. I got a 1. I got a couple 1s. There we go. There we go. So listen, the whole reason why I wanted to say that and ask that is because with engagement from you all, now when it's a difference. This for Tracy, because I already know. It's a difference when you're asking for someone to ask questions and when you're not asking someone to ask questions. It's a difference. So you have to understand to take advantage of the opportunities when you have them, because sometimes people are on the go so much that they don't really have a lot of time to focus on little or smaller things that can be answered by simply going over your immediate trainer from IML. So what we're doing here is to make sure that we take the time out of our schedules to make sure we help you all get the understanding that you need, because we understood what we needed that we didn't have. So we decided to create this for the people that we're loving on, we're blessing with this opportunity. So at the end of the day, we appreciate you. Be sure to ask your questions, because we live, folks. Right now tonight is 10:12. If you've been studying, you already know the London session starts 4 a.m. That's why I call it 4 a.m. bag check, because at 4 a.m., one of the most volatile sessions inside the foreign exchange market is lit. 4 to 8 a.m. is a good time to be trading. Just throwing it out there. 4 to 10 a.m. actually is a good time to be trading for some of you later people getting up. But I'm telling you right now, if you're in this contest, it started already. So if you see some of these trades setting up based on what you just learned, I recommend taking them. Keep in mind, patience is key. So if it don't check out, it don't check out. Wait, because your $3,000 account, if it decrease, you're going to try to make it increase faster, which means you're going to take more risk when you don't have to. So the smart thing would do to take high probability trades and make sure they check out. And if they check out, all blue. meaning bag check. And I'm going to be smiling because I already know if I had the opportunity, I'd be doing everything in my power to catch the extra bag. So that's been your boy. I am Jay Marine. I have literally just took a couple of hours of your night, and I appreciate your time. I appreciate the whole Dream Team leadership being here for the team, because this makes this a lot more success driven for the people who are here that's joining us. So we do appreciate the leadership. We appreciate the vision from Tracy, and we appreciate you all for being here with us and believing in the vision that we have for you all. So thank you. Your boy is out, and I'm gonna turn it back over to Tracy for the closing remarks.
All right. Well, thank you, Jamie. I think that was an amazing session. Make sure you stop sharing for us. And guys, if you enjoyed this session, it's already coming in, but just put something, show Jamie some love in the chat, because I think it was well deserved, right? He took his time, went over everything. No stone was left unturned. All right. No stone was left unturned. So if there's something that you missed, guess what? You've got this particular replay that will be in our group. You also have the Luke Longmire sessions inside of IML TV, the recordings. So you guys should be good. Okay. I will tell you, based on what Luke has taught, that you should see this set up maybe 3 or 4 different times every day. Okay, every day. So if you're looking at those 4 pairs consistently, and you want to be on a 15-minute chart, okay, the 15-minute chart, you should be able to place trades just from this strategy alone. Okay, again, you're not restricted, but we want to make sure that the team has given you a strategy that you can employ right out of the gate, so that you don't have to struggle and strain and stress with finding ways to place successful, high profitable trades. All right. So guys, I'm super excited. Remember, the contest is starting tonight. You want to get going. You know, I will also say that, you know, Jamie did mention this about the times to trade, right? I mean, you can trade anytime you want to, obviously, but if you're looking for when the market is really moving, it's moving more so during the London session. Okay, everybody should know what the London session is, but the London session is going to start around 2 or 3 in the morning, right? 2 or 3 in the morning, up to about 8 o'clock in the morning Eastern Standard Time. Eastern Standard Time, right? Maybe even to 10, and that's because the London banks, guys. In case you didn't know, the London banks are the largest banks in the world. They're the largest, period, right? And so when the London banks are open, I mean, what you think, literally, just think about your bank. Your bank opens at 8 a.m. usually and closes at 5, right? Same thing happens in London, except that they are processing a lot of transactions from governments. They're processing transactions from large institutions. They're moving large sums of money from one side of the world to the other. And when they are open, it's more than just the tellers processing deposits from people that work in the UK, right? Like our banks, they're doing a lot more than just waiting on us to come stand in line to take out our $500. They're actually there to move the money around and to process orders. And so because the biggest banks are in London, they're processing the biggest orders. And that is happening when they are open. And they are open from like 8 a.m. to 5 p.m. their time, right? Which compared to the Eastern time, they're 5 hours ahead of Eastern. Okay, so that's why, 3 a.m. in the morning for us is 8 a.m. for them, Eastern time. Okay, now if you're at Central and things like that, you got to subtract and do all that. But 8 a.m., 3 a.m. Eastern is 8 a.m. London time, right? Their bank is open. And then obviously when it gets to be more like, 10, 11 our time, their banks are slowing down. It's like 4 or 5. Right? So just consider that, right? Consider looking at your trades between that 3 a.m. and 10 and 11 a.m. Eastern Standard Time frame. If you can't do it during that time, then you might want to get up early in the morning and start. Now, why am I pressing you to do that? Because this is a serious business. And this is where you're saying you want to learn the skill to change your life. And if you're not willing to change some of the habits that you have, such as sleep, then you will never be able to play the game that the big boys and girls play, right? Why? Because you'll be on the employee mindset. And employee mindset is I need to go to sleep so I can get up at 6 o'clock to be at work at 8. And as long as you're thinking that way, you will make that type of money forever. You guys know of a saying, and I never fully understood it, right? Even in business, I never understood when people said the early bird gets the worm. Like that never made any sense to me. You guys, anybody heard that before? Like the early bird gets the worm, right? And I was always trying to think like, what worm are they talking about? And I knew worm was, a figurative speech, but I'm trying to, what is it? What am I getting early? Right? If I'm getting up at 6 o'clock or 7 o'clock or 8, how is that me doing any better than somebody getting up at 10 or 11 going to work, right? Second shift. I think it's better to sleep till 10 than to sleep till 6. All right. And then I realized that when you're playing in the money game of the wealthy, the early bird gets the worm. Yes, getting up at 3 and 4 in the morning means that you are getting the bag before the average person is even up for the day. So you're already set. Now I know what the phrase means. The early bird gets the worm. You get your bag and you could go back to sleep if you want to. Once you got enough and you got the skill going and you walk away and you start making some of the changes that you want. But I want you to also keep in mind the mindset of why you're doing this. This is not the lazy man's way to getting rich. Okay. It is the person who is willing to sacrifice at the beginning to build the momentum for change in their life. And if you're not willing to do that, if you're not willing to sacrifice what you're doing right now to get what you want to get, you will never have what you say you want. You will always just barely make it. You'll be mediocre. And this dream team is not about mediocrity. This team is about excellence. Okay. Ultimate excellence. This team is about literally living your dreams, right? You know the slogan of the team. It's see it, feel it, live it. See what? See your dreams. You have to see it. And after in your mind, you see it. And after you see it, what do you have to do? You have to feel it. You got to feel yourself already being there, already experiencing this thing. And then what do you do last? Then you live it. Then you live it. You will not live it before seeing it and feeling it consistently enough. You just will not. And it's unfortunate that that's such a simple formula that most people are not willing to employ in their lives. So what we're looking to do seriously, all the jokes aside, right? We have fun. We have our hashtags. We have DTFX. We have get the bag. We get the bag and run. We have all the different terminology because what we do is fun. But at the end of the day, Jamie's up at 3 and 4 in the morning. Okay. At the end of the day, the master traders that teach these strategies, they're up at 3 and 4 in the morning. At the end of the day, the people that are still working their jobs, that are learning this skill, are up at 3 and 4 in the morning. Why? Because that's where the majority of the money is being made in the world between 3 a.m. Eastern and 11 a.m. Eastern. Okay. So all I'm going to say is figure it out. Figure out what you really want to do and figure out what you're willing to do to get it. Right now. Do we get up at 3 and 4 in the morning? Yes, we do. Right? Me and my accountability team and squad and partner, who happens to be Jamie, we get up at 4 in the morning. Right? We do. We've got other team members like Tyree and Tino and Ramonia. They're an accountability group. Do they get up in the morning? Yes, they do. So there's other teams within our team or accountability groups within our team where people get together and they do what they need to do. So this is why it's important that we stress getting an accountability partner as well. Okay. So
as well as participating so that you can see who is out here and then, finding an accountability partner.
You got it. You got it. One of the key things, and we'll talk about this later, but you want to make sure you're on our team meetings on Wednesdays. Right? Once it's in the Facebook group, all that stuff is already there. The Dream Team weekly hangout, Wednesday nights, 9 p.m. Eastern Standard Time. It's a full team event, right? And you get to meet all the new people and you get to, associate and grab your accountability partners, all right? Do you have a group that's up at 3 a.m. so we can all trade together? So Steph.
4 a.m. bag check. My bad.
We do have a group, but I'm going to, we have different groups with different skill levels, right? So the group I'm with, I personally would not throw you into that group, right? We're doing we've been at this for about 7 or 8 months already, right? So we're doing different things. We've got, There's a lot going on. What my recommendation is that you connect with some of the other members of the team that need accountability partners, or where there's a group already set where the skill level is similar there, right? The people that I'm getting up with, our skill level is similar, okay? Similar. And I'm not the most skilled person in my group.
Similar as in we've been getting our heads busted long enough to understand. But we all done got our heads busted.
Right? Have we blown accounts? Yes. Do we get mad? Yes. Do we call each other and be like, this is some bull? Yes. Do we not trade for certain days because we frustrated? Yes. And so we've been through that already. And so we just know how to support each other. Okay. So we want you to grow and do that as well. So in the virtual trading summit, I recommend, here's what my first recommendation would be: get with somebody in the virtual trading summit, because all of you guys are starting together now, right? Get together in a group of 2 or 3, okay? And you guys decide to get up, and you guys set up your own time frame, and you guys set up the parameters for how you're going to do your accountability group, okay? And maybe it's, okay, we're gonna get up at 3, we're gonna get up at 4, and what we're gonna do, maybe one person look at the Euro AUD pair, maybe somebody else look at the GJ pair, somebody else look at the GA, somebody else look at the GU pair, and now each of you got your eyes on it, and when you see this setup forming, hey guys, I see something forming, what do you think? Right? And you use each other to kind of separate the work, so to speak, but then you come together when it's time to place the trade, right? You got to work together. It's the best way, right? Otherwise you can do it by yourself, but it's lonely out there, and there's no need to do that. You can have way more fun if you just, win and lose with others. Win and lose with others is always better, right? So I think that pretty much.
I'll tell you straight up, it's no better feeling than watching other people have success, for real. Like it's cool when you do it and when you're successful and you win it, and it's a great feeling. But when you know for a fact that you're helping people and everybody collectively is winning, it's just like, it's an amazing feeling. So y'all need to get used to it, because that's the dream team way of making things happen over here. So get used to success. Let's make it happen.
All right, so guys, we're going to go ahead and call it a night. Jamie, thank you again so much for an amazing, wonderful, masterful training tonight on the SnapBack strategy and breaking it all down for everybody.
SnapBack.
The contest starts tonight. Start trading, ladies and gentlemen. And on tomorrow night, we've got a special treat. We've got a master trader coming to speak and train for about 90 minutes or so. 7-figure master trader. So you guys want to be here, you're going to be in full effect, and you want to be ready to learn. And listen, it's not about learning more. What you will find in tomorrow's session, in the next session, is a lot of what Jamie went over. You would just hear it and see it maybe more elementary, right? Maybe more elementary, because it wasn't Jamie's objective to teach support and resistance. It wasn't his objective to teach trend lines. It wasn't his objective to teach all of that. His objective was to teach you the SnapBack strategy. So tomorrow, you're going to get more of the elementary lessons on your 4 confirmations and such, and you're going to be ready and good to go. All right. So guys, use the Facebook group if you have questions, collaborate with each other, start putting together your accountability groups, and we'll have the recording up shortly. And I will look forward to seeing you guys in the next session on tomorrow. Later, guys.